This one I fully expect to double, triple, and possibly even quadruple in value. So it's looking like we're about to get another fat stimulus check, as long as Congress stops dragging their feet. And you want to learn how to invest it, huh? Well, I'm gonna tell you. Also, for the point of this video, let's just assume that you're not struggling to pay for groceries, rent, electricity, or any other sort of payments like your car or mortgage. Because investing your money in the stock market while in financial troubles would be very financially irresponsible and could lead to even more financial issues due to emotional pressure from bills causing you to invest emotionally and trying to do something crazy like day trading and speculating on stocks for short-term gains. Hey, what's going on, everybody? My name is Evan.
And welcome to the Financial Dominance YouTube channel.
So in this video, I'm going to tell you about 3 stocks that I personally own and fully anticipate to double, and some of these even triple in value. But if you want an even higher return on your investment, more than 100%, 200%, 300%, like the sky is the limit, I highly recommend investing your money into learning a skill. Shoot, get a subscription to something, and this isn't a sponsor or anything. Get a subscription to something like Skillshare and start creating something as a side hobby that you can steadily build to replace your main source of income and could make you thousands or even tens of thousands over the long term for something you just subscribed to for $100. And like I said, that's not even a sponsor. That's literally something I'm doing just to make some content out of the research that I'm already doing. Now, don't get me wrong. There's definitely a place for a passive investment where you just let that money sit and accumulate wealth over time. And we're going to get to that in a minute. But another great way to invest your $1,200 stimulus check would be to grow your skill set and earning power by buying a huge stack of business books or investing books and just educate yourself. I know this might sound harsh, but it's reality when talking about earning more money. The only way to earn more money is to offer more skills and value to the marketplace than the next guy. In short, the more you learn, the more you earn. The fact of the matter is, investing in something that can help you grow your active income, like learning a new skill, is always going to get you a better return on investment than just throwing it into a stock market for an average of an 8% a year return. But if you're a stock picker, which is what I like to do, and you do your due diligence and a lot of research on each company, and you fundamentally understand what you're putting your money in, you can vastly increase that 8% return and just obliterate the stock market and obliterate that 8%. Which brings me to the stock part of the video. This one I fully expect to double, triple, and possibly even quadruple in value. Carnival Cruise Lines! They're typically a great, highly profitable company that has so much extra cash that they'll literally just pay it out to their shareholders in the form of dividends. But their stock has been so beaten down lately due to the pause in sailing. And the reason I fully anticipate to double my money in this stock over the long term has everything to do with the management and the way they have handled this whole pandemic. They've raised billions in cash at a very reasonable interest rate. As stated on the earnings call recently, it has a total interest rate of 5%, which is way more manageable long-term than their original 10% interest rate on that early capital raise towards the start of the shutdown. This vast amount of cash is more than enough to last them all the way to the end of 2021 in a zero revenue situation, which in my opinion is more than enough, since they're going to start sailing, starting with 1 ship in Germany at the end of this month, and sailing more and more as slowly but surely countries beat coronavirus. And to be fair, this next part, a little speculative. But I'm betting over the next few months, not only will countries naturally beat COVID from social distancing measures and wearing masks in public, but I also believe that treatments and or a vaccine will be produced and widely available, which will lift sailing restrictions. Once sailing can be done safely, I'm confident that there will be more than enough demand for Carnival to operate profitably, since 2021 bookings are within historical ranges, signifying that there is no issues with demand, as well as Carnival's ability to operate a cruise ship profitably at only 30 to 50% capacity. That is huge. So even if there is a dip in bookings after pent-up demand wears off, I think they'll have more than enough net income to make it through to the other side of the pandemic as customers regain confidence in cruising. But that's just a quick overview of this one, and I wanted to put it first because I think they're going to be my biggest winner over the next 3 to 5 years. Next up is Tesla. First off, the management thought process and culture of this company is by far better than many companies out there, let alone the auto industry. And while I'm already up well over 100% in my Tesla position, I'm nowhere close to selling this company because honestly, it's just the beginning for Tesla. Robo-taxis. I mean, do I need to say more? In the foreseeable near future, about 3 to 5 years, Tesla should be coming close, if not have already solved full self-driving, and launch their robo-taxi fleet app. And this is just going to skyrocket their revenues since it'll be a very high margin income and their profits are going to shoot through the roof. And the cost on this revenue is going to be so cheap due to vertical integration and driving down costs, and we'll probably see companies like Uber and Lyft go out of business. I'm not saying that's a good thing because those are people's jobs we're talking about, but it just goes to show you how disruptive Tesla is. And mark my words, there is many other industries that Tesla will disrupt that haven't even been mentioned anywhere. When Tesla gets battery density high enough, I wouldn't be surprised if Airbus and Boeing are disrupted. Mark my words. But there's so much happening for Tesla even before that, like semi-trucks, Cybertruck, solar roof, and a possible compact car that undercuts even the Model 3. And even though this revenue stream won't last forever because it will eventually get phased out, people literally pay billions for Tesla's trash. Zero emission credits, which other struggling automakers pay so much money for, is just free money for Tesla, and they don't even need these credits because all their cars are already zero emissions. So therefore they can't get fined for having too much production of gas cars. So it's literally just free money on their balance sheet. And with all of these things said, Elon Musk might be off on his time horizons from time to time, but he always executes. And plus, I mean, the man's literally a rocket scientist. He just shot people up into space and brought them back safely. So I will gladly trust this guy with the future of a few $1,000s of mine. There's just so much going right for Tesla in the short, medium, and long term for Tesla that it's not even fair. And honestly, I could make a whole hour-long video on why I'm not selling my Tesla shares anytime soon. But for crying out loud, they're not even close to having any competition. I mean, just look at this clip.
Battery.
Have you been in a Tesla before?
It's a battery.
No, have you been in one?
It's a battery with
wait,
wheels.
I'm being for real right now. Have you been in one? Have you been in one? Have you sat in one and driven one?
No, I have not. No,
I wouldn't be surprised if this stock price doubled even from here in the next 3 to 5 years. And I fully intend to hold this one even much longer than that. Shoot, I might even hold this one until they're a dividend company. I don't know. Anyway, next one is Cheesecake Factory. I actually put this one last because it's kind of in the same situation as Carnival Cruise Lines, but it's actually in a much better position than Carnival Cruise Lines is to come out on the other side of this stronger than it went in. Even though Cheesecake Factory has ran quite a bit recently, I still think it's another possible double up in the long term with a 6% dividend yield on cost today, which is obviously cut right now, but eventually I'm sure they will start paying it again. And it's a very interesting recovery play for me personally, but before we get into the positives, there was a big red flag for me personally when I was doing some research into the stock lately, because as you can see, before this one was even hit by coronavirus, it had been in decline since 2017 highs of the mid-60s. And after doing some research, I concluded that a lot of people were just FOMOing into that stock because of its growth and its future revenues and driving the price up to cause it to trade at a premium. Everybody thought cake was going to the moon. But then what caused it to sell off is that Cheesecake Factory was showing really strong signs of growth and then even beat earnings estimates, but then only managed to grow revenues 2%. So their growth suddenly started to show signs of weakness and has been trading in the $40 to $50 range ever since that point. So where do we go from here? Well, Cheesecake Factory is actually just under half off right now, looking at $1.7 billion in market cap as of late December 2019, compared to the now $1.14 billion market cap that it's trading at now. So just real quick here, my thesis on this stock is a lot like Carnival Cruise Lines, but a little better. They just raised $200 million in capital in April, so I have no doubt that they'll make it to the end of this given their long runway. And if they can just get back to normal operations, then I'll be seeing massive capital gains in this one, as well as a possible dividend comeback. And the reason I believe they'll be able to get back to normal operation, as well as surpass that, not to mention that they may even come out of COVID better than they went in, because the restaurant landscape is going to be a lot less competitive than it was going into this, from all of the companies that went bankrupt due to them not having the access to $200 million in capital like Cheesecake Factory did. And as sad as that is, this is one of those cases where it pays to be a big company, because oftentimes these companies have access to resources that smaller ones don't, and the big companies get bigger and the smaller ones get smaller. And not only will their sales be higher because of less competition, but a lot of restaurants who innovated during this period will not only see their sales return to normal from where they were before the pandemic, but also see sales increase from whatever side streams of income they made to move product during the pandemic that they used to stay afloat, such as delivery and DoorDash and takeout order types of revenue streams. I believe this type of selling in the pandemic has allowed them to steal market share from other restaurants going into the recovery, because a lot of restaurants just closed their doors and stopped operating and didn't push through. Cheesecake Factory also has a bit of a wild card factor to their business too. They're growing several smaller brands that don't contribute much to the bottom line at the moment, and until they do, I think this one, once back to normal, will be a $40 to $50 stock with a nice dividend and could show some real growth potential in the future, just like they did in 2017, if their smaller brands can gain some traction. And at that point, I actually could see them pushing back up to the $60 mark because of that anticipation of future growth and revenue. So all in all, with Cheesecake Factory, it's not going to skyrocket like I think Carnival or Tesla will, because it's already ran quite a bit, but I can for sure see it going back to the $40 to $60 range in the next couple of years, all while paying those sweet, juicy dividends. And just keep in mind, if you do end up buying stocks with your stimulus money, even if you do successfully double $1,200, it's still $2,400, which is still a lot of money, but it's not life-changing money. And possibly at the end of the day, you might be better off learning a new skill that would allow you to earn way more than that. So just try to keep some of your expectations reasonable. I do want you guys to make a lot of money, and so I'm just trying to steer some of you guys in the right direction if some of you guys are having some thoughts of doing some riskier things. Because you truly can and will build quite a lot of wealth by investing over time. But just remember that Rome wasn't built in a day. So thank you guys so much for watching. Leave a like if you enjoyed. I did put a lot of time into this one, so if you could just leave a like if you enjoyed it. And subscribe if you're new. And yeah, I'll see you guys in the next one. Later.